All right, what's going on, guys? Edward here, back with another video. And in this episode, I want to discuss about market structure shift slash change of character because it's basically the same. However, now this time we're going to be using it, or I am going to be using it for the first time this way. Okay, since I'm following ICT at this point, and I want to show you uh, how you can spot, where you can spot, and when, and how you can actually react to it. Like, what can you do? What sort of entries you can actually be looking for when you see a market structure shift? Where you can actually make your entries, and when. So right here, let me just go ahead and jump in directly on the chart. So I'm on S&P 500 right here on a 1 hour, and we clearly see that we have a low in this area that, let's see if price actually will start breaking to the downside. We're actually seeing a break of a structure to downside. Let's see if it's going to continue. If it really wants to continue, maybe it's gonna just maybe keep breaking lows to the downside, okay? Or if all of a sudden, after seeing a break, a potential break that is happening right here, market will fail to continue displacing to the downside, and it's going to displace back up, okay? And in this case, we see clearly that, like right here above this side, this would be our market structure shift, or in this case, chop, right? Right here, that would be our market structure shift if price decides not to continue to the downside and it decides to turn back up, it has to have displacement. So what do we have right here? Look at this trend, okay, of this thing. Look at this trend and how the price, after the break, strong momentum to the downside, now we have this strong push, right, all the way up, okay? Now, very important what we're having here, you can kind of see that this was a supply, right? That supply failed, right? Actually failed. It got disrespected. And you can use also actually this entry, even though this is not for this video, but this could be an actual breaker block. You could be looking for a potential entry in this breaker block right here. Okay. But anyways, we're not actually paying attention to that. We're actually paying attention today to the market structure shift. Okay. Where does it happen? Okay. So we do have a break to the downside right here. Basically, this was a liquidity graph. What is happening right there in higher time frame? What it's looking like? It's a week. Okay. Like I normally call it inducement. So you see on H4, what we have, it's a complete inducement. So after that inducement, I'm expecting this low, this last low right here, I'm expecting that low to be protected, okay, after that inducement. So of course, I'm going to be looking for a buy. How can we look for a buy? We can just simply wait for the price to start pulling back, and we can actually trade the fair value gap. So I'm seeing that the price broke right here. You see it broke this high, which is our market structure shift, and it left this fair value gap right here. Now, I am interested in looking for buys when price is in the discount. Okay, so what I would do is I will go ahead and use my Fibonacci and see at the moment, this is where the price is at the moment, right? So I don't want to look for a buy right here right now, or be placing any buy limit order at the moment, because I'm in the premium zone. I want to be the price. I want the price to be in a discount, so I need to wait a little bit more. Let's see what it does. You see, actually, price did go higher this time, and you see that the actual zone is right here. Okay, we're actually touching that fair value gap. Price starts to go lower. Okay, and just for this scenario, just for this case, I wanna mark just to see what's going to happen. By the way, in this it was a supply, but this is actually a breaker right now. No, I'm sorry, let me put breaker right here. Okay, so we have a breaker block, and let's see, because now you could be looking for longs either at the fair value gap right here, right, placing the stop below this last low. Remember, this low is supposed to be protected. If we go back on H4, as I mentioned, this low is supposed to be protected right here after that huge inducement to the downside. That failure to displace below is telling me price wants to go up. So now my target, I could be aiming maybe this buy side liquidity at the top. Let's see if it's going to be actually coming back down. It did get inside. You see it touched it, and then from there, let's see. All right, we see the price actually ended up displacing all the way up. So you see that sometimes when you see a break of a structure, the body of the candle actually closing below, guys, doesn't necessarily means that the price will continue bearish. You still have to wait and see. Whatever time frame you are, of course, this was on a 1 hour. So it literally took after the break, let's see, one, so you have that break, right? So 1, 2, 3, 4, 5 hours later, you realize, oh, this thing doesn't want to go down. 5 hours later, right? On the 1 hour, you're on the 1 hour time frame. On a 4 hour time frame, you realize that this 4 hour candle failed to displace below this low. We have that huge inducement retracement, right? Price retrace all the way back up. Now, the next candle is giving me, that how it closed is giving me that potential. Hey, price wants to go up. Price wants to reverse. So this is basically how you can trade uh, this sort of setups and where you spot the actual market structure shift. So let me go ahead and actually look for another setup, maybe on a different time frame. Now, in this example, I want to show you this is why you have to be careful, okay? Because not all the time, this is definitely not the holy grail. It's not gonna work all the time, all right? So what we can see here, price swept, right? This high right here, very nice swept, and now we see price sort of trying to displace below. What do we want to see if we want to get into this trade? Maybe we can go in lower time frame. You can go maybe on a 5 minute. Let's see if you can spot. You see that on the 5 minute, we're actually seeing the market structure shift where it happened, right? We do have market structure shift here, right? We have market structure shift. We can be using our fib. Let's see right here. Do we have any fair value gap? In this case, I am not showing any fair value gap in this area. Let's see what it's going to do from here. Is it going to create another low? All right, continue melting. Yeah, look at that big meltdown right there. Probably this was the fair value gap that got mitigated. But if you look at it, let's go back to the 15. Yeah, look at this. So here we actually have on the 15 minute, this is looking like another market structure shift right here, right? On this time frame, right? Or chalk. So what are we waiting for? If you don't have any any imbalance or order block right here or a clean order block, don't take them. Okay, we can see that all these fair value gaps has been filled. Like there is nothing right here. There's nothing right here. There's nothing. We can just say that all right. We'll maybe have this extreme all the way to the top. So let's see what market is going to do from there. All of a sudden, you see price pushing up, and now look at what's happening. Right? Look at what's happening. What time was this? Oh, this is New York. New York Stock Exchange is actually opening right here. This is 9:30. So this is where it gets messy. Depending on the day, especially this is on US 30 right here, it gets very, very messy. So look at what's happening, right? You even after seeing this market structure shift, price ended up creating a new high and sweeping that high. So you see you had a failure right here if you were looking for a buy, but you see that there was no fair value gaps right here all the way down. There wasn't anything really clean or clear to take. So, um, you cannot just be buying or selling just because price is in the discount or on the premium, right? You have to have all your confluences. So what we're seeing is that at the moment price is breaking again, or at least trying to break another high, right? So what we know so far is that the New York Stock Exchange is just opening, and of course, what's happening right here. Probably market is actually filling this gap, this fair value gap somewhere here. Sorry, this one right here. Looks like that's where the price is reacting. But let's see what sort of reaction we're going to continue having. Remember, if it's sweeping that high, only sweeping, I want to look for a sell. Maybe I'm interested in a sell, but after seeing displacement and a fair value gap to the downside, before I actually jump in. And of course, that market structure shift is important as well. You have to see that market structure shift. So let's see. Prices is still struggling. Is the New York Stock Exchange? I tell you, this is always like that. Price just swept another high, so we do have another. Let me move this here. We do have another sweep. Let's go on 5 minute. Price is very indecisive. Look at the size of this candle and how weird the candles are looking, right? And very, very weird. So let's see. We have that failure. We're starting to displace. I like that we're starting to displace to the downside. Price is coming back up. It looks like on the 5 minute, it's giving. I think I move it way too fast. But let's see. We have an impulse correction. Yeah, it looks very from here after this bearish candle. This was the bearish candle. Okay, there we go. Probably this was our market structure shift in lower time frame right here, and our fair value gap was right here, right? So probably our entry would have been in this area. Stop. We can put it above that high, maybe above this high right there. Take profit 1 to 2, or you want to aim for the sell side liquidity, which is these recent lows. You could be aiming those. But it's very choppy. Look at this, right? Very, very choppy. Watch out for this. Very, very careful. As long as you're seeing this placement to the downside after failing to continue creating new highs, you can go for it, but still be very cautious. Look at that. Price is pushing up again. It went all the way up. Look, almost getting me out. Now it's displacing back to the downside. Now from there, okay, it went directly. So you see that you cannot place a stop loss just above that fair value gap. Okay, always have to protect it on the highs. Okay, either this high or even this high. Just to go safer. Right. But this was a very challenging day, and it got very, very crazy after the New York Stock Exchange when it opened. Right. So things like that are going to happen. Plus, you also know your confluence. In this case, to go selling is actually really good because you can see that actually, oof, yeah, look at this. Price also swept liquidity. It swept this high before it broke. We do have a market structure shift right here. Then price pushed up. We have an inducement again. We have another liquidity grab before a drop. We do have a fair value gap to the downside. I mean, the bias is definitely bearish from here. So why not be looking for sales in this case, in this scenario? You know. So let's see if I can actually give you one more example, and we can call it a day. Let's see. All right, so right here, now just without going too far, I spotted another um, potential break that is actually happening. This is on H1. I'm on US 30. We do have the price trying to break above. Let's go in lower time frame. 15 minute. That break. There's a strong return. Look at that. Price broke above and immediately came back down. I want to see that on lower time frame. I want to see that on 15 minute because probably the entry is going to be on the 15 minute. And this is going to be real quick. Normally it's real quick. When it happens, like I like the ones that are just, broke and return right away. When you see something like that, you have to go in lower time frames because there's most likely that fair value gap that you need. Okay. And this is actually your entry just like that. This is normally very aggressive. But do you see? The only thing is that right now, are you seeing the actual market structure shift happening right now? No, right? There's no market structure shift right now because that would be somewhere here. So that's the only thing. Let's see what's going to happen because you're making that position before the market structure shift. So it's a very aggressive position. Let's see what's going to happen. I want to see what's going to happen. Boom. Okay. It's good. Now look at what's happening. It's displacing to the downside, right? I was just saying that, hey, we're just a little scared because making an entry right here before the market structure shift is not good. But now you're seeing the market structure shift. So now it's time to place your sell limit. And your stop has to be above that high. That's supposed to be protected. That high is most likely going to be protected after, of course, seeing now your market structure shift. Where's going to be your target? Again, you can aim for that 1 to 2, or you can aim for for some sell side liquidity, depending, right? Sometimes not too far. I'll be fine with that 1 to 2 from there. But let's go with this. I am interested maybe in this lows, to be honest, because price pushed up from this low. I like that move. So let's see anyways if we're gonna get activated now from there after seeing that market structure shift. Price pulls back, sort of choppy, but hey, it did mitigate, it did activate the entry. Price did pull back, and let's see what's gonna happen. Look at that, it got even higher. It got even higher. You see? So in this case, it did activate your entry. If you were on break even buy here, price went up, finally it did get a little bit deeper into that fair value gap before that big meltdown. So this would have been either a break even trade, or if you had more patience, you did not place it on break even just yet, and you had more patience, hey, you took a nice win right there. Price, it's even sweeping that previous low right there. But this would have been interested, very, very interesting, because I think I personally, I would have been stopped out on break even, to be honest, because at this point, after seeing breaks, I see another break right here. Oh, most likely I'll be on break even, or if I'm halfway down my target, take partial profits and move stops to break even. But I personally believe that I would have been stopped out on break even. But anyways, this would have been a beautiful trade, after that inducement. Let's see how it looks on the 1 hour. But yeah, it's just the week. Literally, you're trading the week, right? So this is what normally happens. This is a very, very important. The market structure shift. Okay, so like before you maybe place your position, just make sure to watch that. Make sure to actually look for that market structure shift or a chalk uh, to happen after after the break to the upside. Make sure to wait for the displacement. All right, strong aggressive sell with a fair value gap, market structure shift, right? Then you're prepared to actually go selling. All right, so even right here, because you see, if you want to use your fib, just from here just from here to here, price was not a discount, but price kept dropping, dropping, dropping. So price, this is a one single move actually. This is one single move. Price pull back to the discount, to in this case premium. I'm sorry, went to the premium, and then boom, it melt down. So beautiful trade right there. I hope it makes sense. Let me know what you think, guys. This type of ICT concept entry models, and let me know if you want to still continue watching these type of things. I'll be more than happy to continue searching and looking for you guys, and making it simple, all right, to understand. So I hope it makes sense. Let me know what you think. Give it a big thumbs up. Subscribe if you're new, and I will see you in the next one. Take it easy.